Good morning, everybody. I am so sorry that we had some technical difficulties on that. I ended up having to pop out my laptop to get this running. So I really apologize for the delay and want to welcome all of you to our webinar, What is New from Fannie Mae and Freddie Mac. My name's Sally Carruthers. I'm President CEO of True Union. And I'm going to try and keep this fairly quick and short and hopefully under an hour. A couple of housekeeping items. You are all on mute. If you have any questions, just kind of get hold of me at, I'll leave my contact information and just send me an email. I'd love to hear your comments. Most especially, I'd love to hear your comments about what else you would like to hear from us. So let's get on with this. So what is new from Fannie Mae and Freddie Mac? I am really going to talk about four things. First of all, the ANSI standardized measurements. Second of all, desktop appraisals, then appraisal capacity issues, and finally, big topic right now, appraisal bias. So let's talk about ANSI standardized measurements. As of April 1st, which is tomorrow, appraisers will be required to use the square foot method for calculating gross living area. It is the ANSI Z265 measurement, and this is kind of an important thing. Up until now, in the whole history of writing appraisal reports, we've never had appraisers being held to the same standard to measure gross living area. And that is a really important factor because, as most of you know, a price per square foot is really the currency of real estate. And if you don't know, or we don't have some kind of consistency in what that actual square foot is, it doesn't make it credible. And so the whole idea with this is that, you know, if you have two appraisers going out to measure a house, they should measure it the same. It should be calculated at the same amount. And I'm sure all of you know that one of the top, complaints, and certainly the top three complaints that go to state regulators is that an appraiser has not measured the house correctly or not measured the house at all. With this standardized measurement, it would be really, really nice if we could get the MLS involved and that we had all listings measured to that same standard. I think that's a good book of business for appraisers and real estate agents if they learn how to do this. So this is a good thing for you guys. So what is Z765? It is this. It is available from the Home Innovation Research Labs. It costs $25. It's 16 pages long. That's it. It's not very long. And so it's not very complicated. The appraisers are actually making a lot of this. It's not terribly complicated. It's very factual. It tells, there are diagrams and it tells the appraiser exactly how to measure the property. So of course, measurements are always perimeter on the outside, if possible. Sometimes that's not possible. Under the ANSI requirements, measurements are to be taken to the nearest inch or tenth of a foot, and the final calculation is to be measured to the whole square foot. Staircases are included. The basement is considered any area that is partially or completely below grade. So anytime there is something underneath, below, anytime you step down essentially from grade level, that is considered, that square footage, finished or not, is included in the basement area. I'm going to just say this, I say this to everyone. It can have value, can have as much value as something above grade, but it is considered in the basement area. The gross living area calculation does not include openings to the floor area below or a full area. So for example, if you have a two-story foyer, that second story is an opening. There is no square foot there. So that has to be taken out. There is a consideration that there are areas that are finished, that are utilized, that have value to the property, but do not qualify for what is called the gross living area under this method. I'm thinking of attic areas sometimes. And what basically the Fannie Mae says is, yes, of course, they might have value, but you've got to pop them into another area in the sales comparison approach. So you'll see an appraiser put an attic area if that attic area doesn't qualify under this square footage method. ANSI is not required for desktop appraisals. There was some confusion on this, and originally I think they were saying yes, it was, but now they're very clear it is not required for the desktop appraisal. So a couple of kind of considerations. You can see this picture here. It is an attic area, probably a 1.5 story or something like that, 2.5 story. And there is something called what we call the 7-foot rule. And it is applies to areas that have sloping ceilings. So basically the 7-foot rule says in order for anything to meet a finished area qualification, it has to have at least 7 foot. And for it to be included in that finished square foot area in an area where the ceiling is sloping, at least 50% of that area must be 7 foot. And then it also says that no portion can be less than 5 foot. It's pretty simple that if this example here, this diagram, if this property has at least 50, this room, sorry, has at least 50% of its area as 7 foot, then the appraiser would measure the room from the 5-foot wall. So that would be counted as gross living area. If you look at the standard, this is clearly shown on the standard. They actually have diagrams of it so that you can see exactly what is going on there. Some other considerations, this only applies to single family homes, townhomes, co-ops, and condominiums. It does not apply to 2 to 4 family dwellings. And, remember, 2 to 4 family dwellings, those appraisal reports don't go into the UCDP portal either. So it's a standardized measurement, essentially for single family homes. It applies to townhomes, co-ops, condominiums. There is specific criteria for dormers, adjoining spaces. Basically, they talk about the wall width, and you can only count it once, obviously. And exterior dimensions using interior measurements. So basically how to, the understanding there are some times where an appraiser cannot make an outside exterior measurement for whatever reason, whether it's, sometimes plant growth or something like that, areas upstairs on the 2nd floor sometimes that are different from the 1st floor. And so they have to make interior measurements, and then how that calculation applies to calculate the square footage. The most important thing, really from a client standpoint, is to ensure that there are disclosures of adherence to the standard within the appraisal report. Very simply put, failure to provide the declarations that are specifically listed on page 3 of the standard will void any adherence to that claim. So page 3 shows how to make that declaration. So if an appraiser may have measured to ANSI standards, but if they do not make the disclosure, then that voids that adherence. So this is a very important thing that you guys will be looking for in your appraisal reports. We will be looking for under QC to ensure that the disclosure there is there. A declaration has to be said or made on how that calculation is based. So they offer three ways. By measurements, the appraiser has actually measured the outside and calculated the square footage based on measurements that they physically made. It could be based on plans and specifications. So a declaration has to be made that it meets ANSI standards based on plans and specifications, or it may be estimated. If for some reason the appraiser is unable to make measurements or there are no plans, it may, how they came up with that declaration. It must include a statement on rounding to state exactly how they rounded to the whole square foot, to the inch, etc. It must consider above and below grade. So they must clearly distinguish. This is the area above grade, this is the area below grade, and then this is if there's a finished area of square foot that isn't included in the square footage, that has to be explained too. Also, there has to be any explanation of or a declaration of an interior space that was not inspected. So, for example, a calculation may have been made, but the appraiser did not actually see this particular square foot. So all this has to be included in the appraisal report, this disclosure. Page 3, as I said, of the standard clearly states exactly what has to be done. That's a really important thing that we are looking for to ensure that there is adherence to the standard. And as I said, it voids the report. It means potentially impacts your sellability to Fannie or Freddie if this disclosure is not in there. There are times that an appraiser may not be able to comply with this ANSI standard. One that I think is really notable may be a property that has its entire square foot below grade. For example, a berm home, something like that. It is clearly understood that that square foot has applicability and is essential to the value. However, an appraiser wouldn't be able to calculate the square foot under ANSI standards for that type of property, and there may be some others. Generally speaking, it should be possible for most properties. If the appraiser is unable to adhere for whatever reason, they have to put this specific code into the additional features. It's a GXX01 code, and then explain exactly why compliance was not possible. Again, putting that into the specific area, the additional features, allows it to be scrubbed in the UCDP portal, and whatever needs to be done, data from that is there. So that is a very important thing. Again, that's something that we will be looking for in our appraisal reports that we're delivering to you guys. We have this in our engagement letter. It's actually already in there, and specifically what the appraiser has to do. We are trusting and hopeful that appraisers have done some type of webinar, continuing education, something on this standard. We have provided 2 webinars to our appraiser partners on this, and there are numerous different things out there. And quite honestly, the 16-page standard is extremely easy to understand. And an appraiser, now they have great tools to be able to do this. Most appraisers are using laser measurements, kind of their tape measures out the door now somewhat, but they should be able to adhere to this, and hopefully we can get other real estate professionals to start using the standard as well for consistency. So next up is our desktop appraisals. These are already in effect. They came into effect this month. The idea of the desktop appraisals, and I know that Fannie and Freddie are promoting the heck out of these. But so far, not getting a lot of support, I think, from our credit union clients, and I can see why, and certainly appraisers seem reticent to do these. But the idea is that they will increase the appraisal process and add some more flexibility. And the idea really to maybe alleviate some of the appraisal capacity issues. Also, we're going to talk about appraisal bias. So we'll reduce that, the potential for appraisal bias. Couple of things that are really kind of important. I think that probably over the last couple of years during COVID, we saw a lot more appraisal waivers, which is great. But the issue with appraisal waivers is that they don't feed the Fannie and Freddie model. We need more appraisals to go through the UCD portal to feed their model. They need that data in order to make, the SSR successful and accurate and be able to assist you with a risk analysis on the appraisal. So I think they fell short over the last couple of years because of the appraisal waivers. It was great to relieve some of the capacity issues, the appraiser capacity issues, but now there is a need to get more information and data into the appraisal, into the UCDP portal and into Fannie and Freddie's database. And so I think this is probably one of the ideas. A desktop appraisal is not a hybrid appraisal. It is not having a inspector out there looking at the property and then sending data to the appraiser to complete. It is simply what we say, an appraiser will do the appraisal from their desktop. However, here comes the really kind of slightly crazy thing. It must include a software generated floor plan that has interior walls and doorways, exterior interior egress, and dimensions of the exterior walls. It must also include photos, front, rear, street, kitchen, bathrooms, main living area. And then the other thing, it cannot include, the appraiser cannot rely on an extraordinary assumption, specifically about age, condition, quality, room count, things like that. So what is an extraordinary assumption? It's basically a thing that an appraiser can utilize if they're unsure of an item. It says that, hey, I don't know, for example, what the condition of this property is. So if it's different from what I state, then all bets are off and my value doesn't mean anything. So they're not allowed to do that. So they have to make a clear statement on what the quality, condition, room count, etc. is. So obviously, since they're not going out to the property, they are going to have to rely on third-party information, whether that's MLS information, and I think a lot of reliance will be on that MLS information and online photos. It may be data from an interested third party, such as a realtor, buyer, seller, someone like that. But if it is information from an interested third party, it must be verified. So how do they do that? Well, they're not going to replicate it. We'll talk a little about verification in a minute, but yes, it's got to be verified. Right now, this is only for purchases, so we don't have this for refinances. There is a specific report used. It is the 1004 desktop. Actually, it looks a lot like the regular 1004, and probably, except for the site work, actually driving to the property, doing the inspection, and driving comparable sales, it's just as much research and data as a 1004. So cost-wise, you're not going to see a lot of discount on the desktop, and I think there's never been any talk of that. Certainly from Fannie and Freddie, there's not an expectation of a somewhat cheaper product. It is really more about improving productivity and speed. There is literally no inspection by the appraiser. If the appraiser does decide to go out and inspect it, it voids the desktop. It then has to be, changed to a traditional appraisal report. Very important is the appraiser must have sufficient information to develop a credible appraisal report. If they are unable, for whatever reason, to obtain physical characteristics or accurate physical characteristics of the property, they can't proceed. So they have to be able to get that information. It may be used on new construction, and I think new construction is a really great use of this product. I think that an appraiser can get sufficient data on a site through external means, whether it is on the internet, Google Earth, or whatever they need to do. Plat maps from the county. You can even get topography maps, and I think you can get sufficient data on a site. And then you have a set of plans and specs. I think it is absolute excellent use of this product, but some others may be more difficult. The report will be submitted to the UCDP portal and scored with an SSR in the same way as a traditional appraisal report. And again, the appraiser cannot make an assumption about characteristics such as condition, quality, count, basements, etc. So let's talk about this verification. So when we talk about verification from an interested party, we're not talking about having to replicate it. There are ways that an appraiser could verify the data. There are websites that show aerial photographs, street photographs. Probably the most efficient way to do this is through video conferencing, usually like a FaceTime or something like that. And there are various apps that will allow an appraiser to be able to recreate their floor plan using these apps. But they are going to have to rely on somebody, and they've got to verify. So that kind of real-time FaceTime thing is probably the best way to do it. But that is going to mean that someone's got to essentially assist them in their job. And that's where I kind of see the issue is, someone's going to turn around and say, hey, I'm doing their job for them. Why am I doing their job? And then also it does include collaboration, for want of a better word, between the appraiser and another party. And I think that could be kind of an issue too. I see it as an issue. So still things to iron out on the desktop appraisal as far as I can see, and we'll be interested to see how it goes and how it moves along, and if appraisers are willing to do it, and if you guys are willing to take them. So let's move on to one of the major things that we are seeing right now. This is not changing, hasn't changed, and that's the appraiser capacity issue. I tell everybody when I was kind of writing this PowerPoint, I originally did it something similar for a group in Tennessee, and I wrote the PowerPoint and this picture of all these bottles. And I imagine they're liquor bottles, because I think most of the appraisers right now are probably drinking a lot. They are busy. There is a lot of work out there, and even though mortgage apps might be down and interest rates up, there is still a huge demand for housing, and the purchase market still is very, very hot. The issue really is that there really are not enough appraisers, and actually there are not enough residential commercial appraisers. We are going to talk about residential appraisers, but there are not enough commercial other appraisers. That's a whole nother story. The amount of appraisers has pretty much stayed the same. Right now, there are about 40,000 residential appraisers out there, and I think that stayed the same since 2014. But the amount of mortgage apps has increased dramatically, especially in 2021, and even continues in 2022. So this graph really shows where we are with this right now. So you can see this yellow line right along here, just the amount of appraisers. It really hasn't changed. We haven't had a lot more in the profession, but the demand for appraisal services has obviously increased. And you look at these figures, particularly during the pandemic, and realize that maybe over 20% of these mortgages were, the refi volume may have been done with appraisal waivers, but still there is an incredible issue that we do not have enough appraisers. And you can kind of run it every which way and say whatever you want, but there is an appraisal capacity issue. So this was done by Freddie Mac, and it shows, let's look at, I probably got some people from Texas in here, Ohio. We had in 2012 to 2009, the average appraiser in Texas was doing about 207 appraisals a year. Ohio, 165. That actually is really low. Because actually these are appraisals being submitted into the UCDP portal. Appraisers are obviously doing a lot more appraisals than just the ones going into the UCDP portal. And also, there are actually a lot less active appraisers than this kind of shows. So for example, this shows people with a single credential, but many appraisers don't actually work in the field. I have multiple appraisal licenses, and I don't actually physically do appraisals. There are a lot of people like me. There are a lot of commercial appraisers. There are a lot of people who do residential and commercial. There are people who only do private appraisals. There are people who do litigation. There are review appraisers. So this number is really low anyhow. But look then into 2020, and you see in Ohio, jumped to 249 appraisals a year, 294 in Texas. So it is an incredible amount that appraisers are doing. And it's not even showing what the reality is. I did some kind of broad kind of calculations in Texas. There are just over 5,000 appraisers in the state of Texas. And based on that number we just saw, that kind of figured out at 5.65 appraisals a week. For 52 weeks a year, the real number is probably close to 8 appraisals a week. For 52 weeks of the year, that's an incredible number when you consider that it probably takes somewhere between 5 to 8 hours to do an appraisal report. So I don't know, the numbers just aren't adding up, and I can tell you there are some very tired appraisers out there. There are it just is an incredible situation now. And what happens is that the big thing that happens for you guys is that your due dates get extended out, and appraisers are trying to work methodically through their pile of appraisals, and unfortunately we are not able just to magic up appraisers. The situation is even worse when you get into rural locations, and there are pockets of vast pockets of areas with very limited amounts of limited appraisers, and sometimes it's areas that you wouldn't think it would be. They're just very kind of, some areas have a glut of appraisers, some areas don't, and it just kind of tends to be it can be very localized. So some potential solutions, we're going to talk about some of these when we get into the appraiser bias. Obviously appraisal waivers, desktop and hybrid, Reduction in loan volume, when none of you guys want to see that, right? Staff appraisers, some of you do have staff appraisers. Some AMCs have staff appraisers, and the whole idea with that is that you can kind of, I guess, control a little bit volume of appraisers. I guess you kind of have them that they're going to, you know, primarily do your work. The issue is finding staff appraisers. Most appraisers don't, you know, they make, quite honestly, they're pretty successful in their own little businesses, and it's tough to find very good appraisers as staff appraisers. Probably the answer is going to be to produce more appraisers, essentially eliminate the barriers for entry into the appraisal profession. And we're going to talk about that specifically as it relates to appraisal bias. I think that anyone except maybe appraisers can agree that it is time that we change some of the barriers, or eliminate those barriers, and get more people into the profession. That is good for you guys. That is good for me. I want more appraisers, but the appraisal profession itself has been really, really, really slow to endorse this or change the qualifications in order to bring more appraisers in. That is about to come to a grinding halt. I don't think the appraisal profession is going to have the same kind of control that they've had before. And that is simply really because of the issue of appraisal bias. There have been numerous reports, many reports out there of appraisal bias. I think that the first kind of media thing was a couple of years ago in the New York Times. And a lot of the examples of these, which is similar to the picture here, this is CBS Mornings, are cases where a black couple or mixed race couple had an appraisal done. The appraisal came in low, and they wanted a second opinion. They were granted a second opinion, which shows me that something was wrong in the first appraisal. And then they essentially took out from the property any kind of indication that it was owned by a black family or multiracial family, and the value came in higher. And this has consistently happened and been shown to happen in many locations. New York, New Jersey, there was a big article in Indianapolis, California, a lot, and there are lawsuits concerned with this. And what these media stories talked about, they started kind of talking about the research that was being done on this, and there is a lot of research, and it really did indicate that appraisers have continued to discriminate, even with the passage of civil rights legislation. It showed that the traditional methods, including the sales comparison approach, could foment racial bias. And there was, as Fannie and Freddie looked at their appraisals, indications of race-related language in appraisal reports, and some of it very shocking. You know, for example, I put some here, black race population, above state average, you know, storefronts supporting Jewish households. These are actually in appraisal reports. So a lot of concern. Freddie Mac showed that they scrubbed their appraisals, and they looked at their makeup of borrowers. They found that there was a higher chance of an appraisal coming in below the contract price in Latino and Black families, which is really shocking. So why is this an issue? Well, it's an issue because we have civil rights legislation, we have fair housing, we have fair lending. It's not the right thing to do. But there is an incredible loss of wealth from this in Black neighborhoods. And, you know, there's a gentleman by the name of Dr. Andre Perry, who's has done amazing research. And he's actually testified in front of Congress. He's from the Brookings Institute. And he has estimated that the average loss in home value in Black neighborhoods is $48,000, which amounts to $156 billion in cumulative loss. Why is that important? It is incredibly important because your house, your home ownership, as you guys know, you're in the mortgage business, is the best way to save wealth, right? Gather wealth. And people use the savings, the money they have in their homes to reinvest into their neighborhoods, whether it's in the property they live in, or by sending their kids to university, or by creating small businesses. The value you have in your property is incredibly important and is incredibly important to creating wealth. So yes, this has now become a really major topic. The biggest factor that is really that is on the board right now is the issue of appraiser demographics. And right now, as the numbers stand right now, 97% of appraisers are white. 1% are Black. That is, I find that number incredible. I'm going to talk a little bit about a hearing, congressional hearing this week. And one of the congresswomen said in that hearing, she said, I haven't seen that number in any other sector. I don't think it exists in any other sector. It is just an incredible amount. 70% are male. 70% of appraisers are male. And this is just something that is flabbergasting. And I think there is a lot to be answered for in this. Maxine Waters, who's chair of the financial, whatever it is, the finance committee in the, finance committee in the House, is very concerned about this. And she did hold a hearing this week. We'll talk a little about that. But she put forward an email that was sent to one of the researchers, and it was from an appraiser who was incredibly qualified. And I'm not going to read the letter, I've seen it, but it was so racist. And her response here, she was shocked. And she said, in the coming months, my committee will convene hearings, advance legislation, continue working with stakeholders to end housing discrimination, and hold the appraisal industry fully accountable. So yes, these things are happening right now. We'll talk about some potential solutions, and I think there will be a comprehensive overhaul of qualification standards and practice. There will be a removal of barriers into entry. There will be a definite improvement of appraiser diversity, and also the recognition of appraisal bias. This is going to be a key takeaway for examiners, and I'm going to just kind of talk about that a little bit here in a minute. You should expect your AMC to have a policy on appraisal bias. We have one. I will forward any of you that want ours, I will forward it to you. You need to have this because the examiners are going to be very concerned with this. So ensure that you have ours, and if you don't use us as an AMC, that you get one from your AMC. It is very important that that is on file. All the things I'm about to talk about are news from this week on appraisal bias. This was an article in the New York Times on Monday, talked about remote appraisals or desktops. It was to reduce social bias, racial bias. It's there from Monday. You can find it. Probably the most important thing that came out this week was this action plan to advance property appraisal and valuation equity, PAVE they call it. It's available on PAVE's website. It is very comprehensive. Who makes up this task force? Well, this is the interesting thing for you guys. It is HUD. It is the White House. In fact, there was a meeting in the White House on Monday with Vice President Kamala Harris to launch this. The appraisal subcommittee and others, the Consumer Financial Protection Bureau for you guys, the National Credit Union Administration, all these agencies, the joint agencies, VA, US Department of Labor are involved in this. So you can bet that this is going to happen, that something is going to happen. So the task force has made various commitments. And essentially, I think there's a general recognition that we have to increase diversity in the appraisal profession, but also that the folks who have been controlling appraiser qualifications and appraiser practices and appraiser standards, it hasn't worked, because what it's resulted in is a appraisal profession made up of 97% white folks and 70% men. And with that, that has resulted in bias. So I think there's a recognition that something needs to change. Something absolutely changed. Now you couple that with what I talked about before, which is the appraiser capacity issues. There's even more that we have to get more people into the profession. We've got to make it more accessible to people. And I think that is what's going to happen. We are going to get more people in the profession. So what are the commitments to strengthen the guardrails against discrimination? Enhance the fair housing, fair lending enforcement, drive accountability in the appraisal industry. That will be done, you guys ask everybody to try and get that accountability in there, and build this new workforce of diverse appraisers. Other thing is empowering consumers to take action against bias. One of the things that came out of this task force that was talked about was to have a recognized process for reconsiderations of value. As you know, every AMC, every lender has a different way of going about it, but to have something that is standardized on a reconsideration of value. And then to give researchers and enforcement agencies better data to study and monitor valuation bias. So there are a lot of things that will be done on this. I think that what we will saw mostly is this drive to increase the number of appraisers and increase the diversity of appraisers. I think that will be done probably by removing the biggest guardrail, or the biggest barrier to appraising, which is the experience side. I think it will be to be able to test out of appraisal classes, and I think there will be a drive to recruit potential appraisers in cities and everywhere. I think it's good. It's going to be very good for you guys. And I don't want to talk about, talking economically. I think all of us have seen appraisal fees go up, and I'm absolutely for appraisers being paid customary and reasonable fees. But then I think there definitely are instances of greed, and I think that having more appraisers will stabilize the cost too, and certainly speed up the process. It's not right now. I have to tell you, it takes longer to be a certified general appraiser than it does to be an airline pilot. That is a little ridiculous. So we need some changes there. So as I told you, there was a hearing on Tuesday. It was a hybrid hearing. It lasted over 3.5 hours. Devalued, denied, and disrespected how appraisal bias and whatever it is. You can get hold of this on and listen to it. It is interesting. It's on YouTube. There is a link to it. There are some very interesting parts of it. What I found interesting was just the disbelief of people when they really understood how the appraisal, the makeup of the appraisal profession. I think that I felt Dave Bonton with the Appraisal Foundation I felt sorry for him. I mean, he is getting pummeled on this. But it's interesting, and I think this is going to be the biggest thing that is going to impact us. So, any questions you might have? I think I managed to get this done by under an hour. I apologize again for our technical difficulties not being able to. Actually, was sharing my screen. I was having issues with. But we appreciate each of you, and thank you very much for being on this webinar. If you guys don't know me already, my email address is right there, and that is my direct, that's actually my mobile phone. So please give me a call. Also, shoot me an email, tell me what else you would like to hear from us as far as client webinars. We would love to hear. So thank you very much, everybody, for joining us, and we really appreciate it.